Everyone, welcome to this week's Mish Market Minute. Will be aired for you on Friday the 13th. We're hoping that's more auspicious than bad. We've got a lot going on in the market, and what we're going to do today is really focus on the real motion indicator. I'm going to show you how you can buy it at the end of the show. But we did a scan, so I'm going to bring you a whole bunch of information today. We're going to start with the real economic modern family, how they're looking in the scans right now in terms of momentum versus price. And this, of course, comes on the heels of a big gap up, particularly in the Russell 2000, as we saw an initial rotation into value, then a little bit of a catch up in growth, and then on Thursday, with a lack of fresh news, some selling. We're also going to look at the best longs and the best shorts on that fresh scan I just told you about. And since last week, I did a big segment on cannabis, and we had a huge move up. Unfortunately, by the time you all saw the video, the move had already started, but things have come back down now. And so we're going to take a look at a few of them to see how the real motion indicator looks and what the next opportunity there might be. So let's get going right away. But I thought before I did that, I always like to give you at least a list of what I've covered so that you can always go back and see before having to listen to the entire video what you might want to review. There's all the symbols for the economic modern family: IWM Russells, XRT Retail, RYT Transportation, SMH Semiconductors, KRE Regional Banks, IBB Biotech. And then some of their long symbols would be Caterpillar, Sienna, Dish, Kohl's, Short, Microsoft, Apple, Chewy, Peloton. And the stocks I'm going to revisit on the cannabis sector would be Grow Generation, MJ, which is the ETF, Cannabis Growth, and Altria, which is a tobacco company. Okay, so let's start now right away with IWM. And as always, I like to put both the real motion and the triple play indicators on here at the same time, both of which are ready. But I really want to focus more on the real motion right now. And I've talked to you about the real motion before, in that it's really what is an invisible indicator, in that you cannot necessarily see momentum when you're looking at a pure price chart. So what we're giving you is a way for you to gauge momentum by actually visually seeing whether or not the momentum is in line with the price. So if the price is going up, momentum is going up, or vice versa, price going down, momentum going down. Or what we're always particularly keenly interested in is a divergence, where the momentum is improving, but the price hasn't quite gotten there, or something is incredibly overbought and the momentum is starting to decline. Those often are really some great opportunities, no matter what time frame you're looking at to trade. And you know, in past, I've taught you about phases, I've taught you about opening ranges and how to use that. When you start to see all of this put together, it really is a great formula for becoming a much, much better trader, whether you're a newbie or whether you're extremely experienced. So right now we're looking at the IWM. This is the Russell 2000. What made this particularly interesting was that this was the week of the election, and we used something called an election reset on the following week. Now, of course, what makes this election particularly challenging is that we don't really necessarily have a president that's conceded, and it's contested, and we don't really know what's going to happen at this point. But nonetheless, from a pure price play, this did gap up in IWM and had a great day out of the gate on Monday, and really since then has been digesting the move until Thursday, with a lack of fresh news, as I just said, with the idea now that the current administration is not interested in talking about stimulus anymore. The fact that the Fed now is talking about the fact that they still have some concerns going forward. And then Fauci comes out and says that the pandemic will no longer be considered a pandemic, with the idea of a vaccine, labor force coming a little bit back into play with more jobs added. It's mixed and it's difficult. So anything that we have here that can help you discern what you should be doing next is a plus. So in this case right now, what we can see is strong bullish phase for one. We're above the 50, we're above the 200, the 10 has got a nice sweeping upward momentum here. And considering that this high right here is 165.71, what we don't want to see ideally is for that gap to get filled. Now, we just took out the low from Monday, which was 169.33 on Thursday as it was trading lower. But nonetheless, as I said, if it really can hold above this 165, gives us room to about 166. I would say below 166, then from a price perspective, I would get a little bit concerned over the next couple of weeks, might get dicey. If it holds 166, comes back through Monday's low, again being at 169.33, then I'd say that this little sell-off here is just some frustrating longs getting out and the market's still overall good. But let's bring it down now here. You could see that the price performance against the SPY had been outperforming, and even though it's come out down a little bit, here it is sitting on the Bollinger Band, so into support. And the momentum after the big peak is also coming down. So what's really, to me, matters most here is that we're not seeing a divergence. It's not like IWM is still going up in price and the momentum is coming down. It's coming down with the price, and that makes sense. So really you can go back to just good old-fashioned chart reading. Now if we go here to XRT, if that's grandpa, this is grandma. Now, XRT is underperforming SPY, so that's been interesting, and has been underperforming SPY even when it made this Monday peak up. And also, if we look at the range from right before the election, even though we had taken it out to the upside, on Thursday, you can see it's breaking back down. So this is sort of a failed breakout at this point with a lot of underlying support. 53.50 is kind of where we're looking at, and then 52 is extremely important because that's where the 50-day moving average is. Now, if we come down here, not only is it well underperforming, which is concerning, and this is going to be an extremely important area to watch, by the way, as we're getting into seasonality, we're getting into holiday shopping, and in a couple of weeks, we'll have Thanksgiving, Black Friday. We already have statistics that are suggesting people will spend less money, and without fresh stimulus, potentially not until February, that will certainly impact the spending. And this has been really actually a good one to gauge as a result of whether or not the consumers are happy as a consumer-led economy. So we've come down in momentum, but right now, once again, no divergence. We're coming right into support. So this 52, 53 area is going to be really, really important to watch over the next couple of days. If we move now on to IYT, which really is sort of the trilogy of the inside sectors of the economy, being the Russell 2000 as supply, granny retail as the GDP, 70%, and transportation as the demand, we could see that this started out actually outperforming the SPY a little bit earlier in the week and now has come down to underperform the SPY. But once again, with the momentum, no divergence, coming down softly with the price with some support here and much bigger support here on the price at the 50-day moving average at 203.51. So I'd like to see this right now hold as it broke out over the election range, and that high of this day right here is 207.30. I'd really like to see this hold around this 208. And if it doesn't, again, I would probably take a more defensive stand in the market in general, even if there's no divergence here. Now, if we move on to semiconductors, they had shot up as well to make new highs, still well outperforming, coming off on the momentum, but not by too bad. So what this is telling you now is that stocks like Zoom, for example, advanced micro devices, some of the tech stocks that are in this area are still doing relatively well. And of course, if there are fears of the possibility of shutdowns, as have been suggested with the surges in the cases, this is where you might see the tech and the growth stocks outshine again. But for now, as I'm saying, not really much in the way of divergence. And of course, what we want to see here is we want to see this hold, well, pretty much where this broke out from, although you can see that the right before the election right here, it was much higher. It broke it out and broke down. So this hasn't been as clean as what we saw in IWM, but nonetheless, this whole area here from the low that we had the other day, which was 188.37, is going to be kind of a key place for it to hold, and that'll keep it above the 10-day moving average. If we move on now to KRE. Now, KRE started out really well this week, because of the fact that the yields were actually tightening and the dollar was actually moving up. Now on Thursday, we're seeing a little bit of a reversal on that, where we're seeing the yields actually starting to come down, some running into the bonds here for safety, and also the dollar coming down as well, which makes a lot of sense to me, all things considered, that we have a situation now where the world is watching us and our election contention, probably thinking, wow. So the dollar is going to lose some value on that. We do not want to see that happen too much. But nonetheless, right now, the banking, we could look at this and say that we're about to get a golden cross right here, but we're still well above it in price. We're well above the 10. And again, based on the election range breakout, the high that day was 43.79. So 44 to 43.79 or 80 is going to be really where you want to see this stop, outperforming here. And again, no divergence, coming down gently with the price right here. So if we just take a look at the last person in the Modern Family, which is IBB, Big Brother Biotechnology, considering all the vaccine news, this really hasn't gone very far, underperforming the SPY. Here we actually do see a divergence in momentum, because look at this. This is under the 200, but above the 50. Price is well over the 200 and well over the 50. So what's that telling you here right now is that this momentum divergence, which is showing a softness here on the momentum while the price is still strong, tells you that you should definitely not be necessarily looking to chase this. And instead, what you would want to see is for this momentum to go back over the 200 and take out the Bollinger Band. At the same time, maybe the price here get through this 144, 145 level, and then you could possibly have a good trade in biotechnology. So if you put that all together right now, the exuberance we saw coming the week after the election and right after the election is starting to wane here, but there's nothing really glaring in terms of divergence other than a correction. And of course, we have prices now. I mentioned that we need to watch for support, all except here in the biotech. And considering this is supposed to be the big savior for COVID, we are seeing the divergence here, which means unless we actually get back up in momentum, this is something you don't want to be doing much in terms of trading. Now, let's take a look at a fresh scan we did on Real Motion, just to take a look at some of the ones that came out with a positive divergence here. So in this case, Caterpillar came out with a positive divergence. When it came out here, as the price was, I'm sorry, let's go back to where the divergence was. Right here, we can see that this came above the 50-day moving average just as this was starting to confirm over the 50-day moving average right here. So you can see that it broke the 50, then it came back over the 50 as the price was under the 50. And so right now you could see what happened here. We got the confirmation of the bullish phase, 2 days of a move over the price, as the divergence already told us the momentum was increasing in Real Motion, and we got that nice big move here. In terms of the triple play, it's now back slightly in par or underperforming the SPY. And again, we're seeing a little bit of a dip in the divergence, in the momentum, but holding support, and pretty much a gentle correction here in Caterpillar. So this would be one to keep an eye on. Really what you want to see right now is this hold around 165. And considering we're very close to the 2018 high, I would say that you'd want to see this take out 175, and then you could see another leg up there. Now, Sienna was another one that came up with positive divergence. This is in the manufacturing sector, which was starting to do well. So let's take a look at when that happened. If you look back here, see where the line's going up and down. This started to clear the 50-day moving average in Real Motion right here, right before it cleared it on the price. And so this finally broke out over the 50, and now you can see it's consolidating. So the momentum told you ahead of time that you might see the movement up here in the actual stock price, and that's just one factor. In terms of what we're seeing also is that it's starting to outperform the SPY, which is good, but this needs to do a little bit more. Just because you see a divergence where something is positive momentum, you need to see the confirmation in price, and then you need to establish your risk reward. So after the first day up, you wouldn't have gotten in because it never had a 30-minute opening range breakout. It closed near the low, and now it's been consolidating. So essentially, if you look down here where the 10 is about to cross over the 50, you could say that around 41, 41.15, provided the momentum doesn't go back down under the 50, would be a good area either to buy against or risk if you decide to get in before that, because look at what's happening here. You have an inside day. So this means that Thursday's range is inside Wednesday's range. Typically what we do in those days is we wait for that range high to be taken out. So through 43.60, you actually might have an opportunity here to be a buyer with a risk under 41 if momentum stays strong. If we move on from here now, another long was Dish, which actually reported earnings. And again, look at how well this worked here in the momentum. So you broke out above both the 50 and the 200 before this broke out either the 50 or the 200. And then after a couple of days, boom, you had the earnings, it broke out, and now it's sitting here trying to digest and hold the 200-day moving average as the momentum is looking pretty good. It's leveled off, and look how well it's starting to outperform. So Dish is something else to keep on your radar. I would say at this point, you'd want to see it hold definitely above the 50. So your 50-day moving average right here is at 28.88. That would be a good point. Even better would be if it could hold the 200, and the 200 there is at 30, well, it's saying 31, but I'm seeing the 200 actually under that. Let's see if I can move that up. The 200 is trading here at, looks like right under 30, like 29.88. So if we hold up around this 29.88, you've got a risk of about $1 here. And you can see with the momentum continuing to grow, it's possible that with about $1 and change risk, if this can move back up above the highs of Thursday, particularly, or over 31, you might be able to see a move maybe even up to 35, possibly even as high as 37.50. Now, one last one on the positive side is Kohl's. And again, this really started to show a divergence in momentum here when you had a move back down to the moving averages, and it started to move up as the price was still below the moving averages. So Kohl was really an interesting opportunity once it cleared over the 50. And even though it broke back down under the 50, look, it never broke down in momentum. So when you bought it over the 50, the most logical stop would have been underneath all of these lows. Anyway, moving here, we had a nice big spike in momentum. We're back down pretty much right to the black line here as this is failing the 200. So at this point, we'd want to see a move back over the 200 or back over 23.12. You can pretty much risk right into all this area of support here around 22, but you also want to see that momentum come back. So that's really a lesson in going long using both. And I'm showing you a little bit after the fact. Now let's take a look at some shorts that are actually setting up as we speak. One being Microsoft. Now here with Microsoft, we started to see a negative divergence as the price was near the highs. In a case like this, you could have gone short against that 225 level, and you would have been sitting there with a stop right over 225, seeing what happened. Because look what happened here. This actually now has tried to test back over the moving averages here in the momentum, but is flipping back down as the price is coming down. Or if you want to just play it off of a pure phase change, with the negative momentum, particularly if it breaks the Bollinger Band, it could at the same time break the 50-day moving average or under 210.61 for 2 consecutive days. And then you would pick a different risk. I would say probably a risk more over the high here at 220. So a $10 risk in Microsoft is not a bad risk to see if you get a move back down closer to the 200. So that's a negative or a potential short. And sometimes these are great, especially for the ones that we think are overdone anyway. Now that's Apple. That is definitely not right. I'm not sure what's going on here. Let's put a different chart up for Apple. Hold on. That's more like it. Okay, so with Apple right here, again, negative divergence. Look at this. Even as Apple was making highs, this never was able to clear very much in terms of the price going anywhere near where the high was back in here. So this told you that it was time at least not to buy Apple, if anything to consider a short, and you had a short opportunity for the first time when it broke down under the 50. Well, now it's back up over the 50, but look what's happening here once again with momentum. It's starting to decline. And if that momentum breaks down under this 200 and this breaks down under the 50 again, or under 114.75 for a couple of days, you again might have a good opportunity to go short. And I'd put a stop somewhere over these highs right here, maybe somewhere over 120, to see if this thing has room to go all the way back down to the 200. So these are really good short opportunities in stocks that have been overbought and whose day may be finally over. Chewy is another one. Now, we did a really good trade long Chewy, but we've been out of Chewy now for a while. In fact, we got out right about here a while ago, and we never got back in, even though the momentum had come back a little bit. Wasn't really convinced because the momentum kept getting weaker and weaker. Well, now you can see the momentum here has broken down under the 50 while the price is still above the 50. So once again, 2 closes under the 50, you could probably risk to about 64 and see where that goes down on the price. And the last one I'm going to show you here in terms of fresh signals or relatively fresh signals, and the short ones, by the way, are all fresh signals, would be in Peloton. So Peloton, look at how weak the momentum got here and how well it's underperforming this SPY. But at this point, when it started to break down, the price was still up. You've had 2 closes under the 50, and even though it's spiked up, it hasn't cleared the 10. So now this might be something else to keep an eye on. If it can get another close under the 50, I think you have a pretty good risk on the short side to over 112.50 to see if this starts breaking down. And then if it breaks down under 100 and underneath all this recent work, we might see a big sell-off there. Okay, so for the last of it right here, what I'm going to do now is I'm going to show you those pot stocks that I was showing you last week. We have Grow Generation, which reported earnings very well, spiked up. But what happened with this one is that you had a reversal top. It made a new all-time high, and then the next day, it closed underneath the low of that day. So until this takes out the high of 24.94, it's still working a reversal pattern. Now, this hasn't actually had any kind of divergence in momentum. It did briefly right here, but it didn't hold. So now you want to keep an eye on this. If the momentum increases and this clears the most recent level of momentum while this takes out 25, you have probably a good opportunity to get another leg up and Grow Generation. And it's very possible that this space can go counter of the market unless the market continues to hold. We don't know yet. Right now, the evidence is still not in terms of whether or not Thursday was a gentle correction in the overall market or the top. We don't know that. But looking at this individually, there's still a chance that this can go counter. On the other hand, if it cannot take out the momentum and it cannot take out the highs and you start to see this flip around, then you know that's not going to be the case. But right now, that looks pretty darn good. So if we look here at MJ, which is the ETF that I really focused on, this also had a big move up in momentum, is coming down, no divergence with the price, and is having an inside day above the 200. So I'd keep an eye on this one as well, because if the momentum starts to come back up, this holds the 200. You have a nice risk against this 1240 level. I'd be looking at either a move over this high, which is 1333, or to fill the gap right here, which is 1373. So either through 1335 or through 1375, I think then you would have another opportunity with a risk down to about 1240. Hopefully you didn't chase this big move that happened right here, took profits when you get these kind of moves, and now looking to see what happens over the next couple of days. But again, no divergence there. Momentum is still behaving itself just like we saw in Grow Generation. And CGC is another one. And CGC, let's go right here. Momentum's come off a little bit, but still outperforming the price, which is holding here the 10-day moving average, getting an inside day here. I would say through 25, it starts to look more interesting. Should hold 22. Again, you want to see the momentum to continue up, and this is well outperforming the SPY as well. So far what we're seeing is, yes, we've seen it come down after a very, very big rally in the cannabis space, but still outperforming the market, outperforming with divergence on the with no divergence on the momentum, and the price still in pretty good shape. So you're really looking for your best risk reward at this point. And finally, I just wanted to show you Altria because we looked at this last week. Again, look at the divergence here. This is through the 50 on the real motion, where we have not been able to get two closes over the 50 in price. So this to me is the simplest one I've shown you in a sense, in that if you continue to stay above the 50 in the real motion, you're going to look for a confirmation of two closes over the 50 here in price, and then you can look to take a position. You have the 200 up above, so maybe not a full position, but figure if you can get through anywhere between 39.50, a couple of days on a close over that, you could probably take a risk maybe to about 38 using the 10-day moving average to see if it can get through this 200-day moving average and continue to go up as well. So that's everything using the actual real motion. With the overall market during a sell-off, that could be just a gentle correction. In all the sectors, the key sectors, with biotech being right now the most questionable, with the fresh longs that I showed you that could be setting up, but more importantly, if the market cannot hold, and even independently, if some of these stocks are tired, like Apple and Microsoft, ways to go short, and how that real motion really helps you. Okay, so for the last minute here, what I want to do is I want to show you how you can find our plugin. So if you go scroll down here, you're going to see triple prey and you're going to see real motion. So if you want to go in and buy, you're certainly able to do that now. They're ready to go. And next week, we will be doing basically a training session. Keith will probably be doing it since he invented the indicator. And we're going to really be able to show you very, very specifically how to use it. And that'll be a video that you can always refer back to when you go in and buy it. But all you have to do is click on See More. The price is $497. That's it. It's yours to keep from there. And of course, you just hit the Buy Now button. There's some more information about it. And then the same thing with the other one. If you look at the triple play, this is how it sets up. Again, Keith will be doing a little bit. He'll spend 15 minutes on both next week, so you have both as a nice training, and how to you really use this a lot using both the volume and the leadership line, which I haven't talked to you much about. That's why I think it'll be exciting to have Keith talk about it, and then how you can buy it for $497. Okay, so I hope that was helpful to you and a good sort of overview of the market, so you don't panic in or out of anything, and you just wait for these setups, and you do them very, very strategically, very logically, and without any emotion. Okay, that's it for now. Thank you so much for watching. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.